The money you save into your pension is invested in different types of assets like shares in companies, otherwise known as equities, bonds or property. And it's also invested in different places around the world. Those investments are traded on financial markets. So how financial markets perform will affect the growth of your pension savings. The performance of shares, bonds and property can be affected by what happens in economies within countries and globally. Keeping an eye on their performance and what's happening in world economies can help give you a better understanding of the impact on your pension. Looking ahead at 2025, the key areas we'll be watching include what happens with inflation or rising prices and with interest rates. We'll also be watching what happens in different economies, particularly as Donald Trump enters the White House and we see what policy changes emerge. The US economy grew in 2024 and inflation moved closer to the targets set by its central bank. Despite difficulties in its property sector, China also saw robust economic growth as its government brought in measures to boost the economy, including supporting its housing sector. The possibility of increased tariffs on Chinese goods during 2025, however, remains a risk. In the UK, economic growth was lacklustre in the third quarter of 2024, with inflation returning closer to its target. The Bank of England cut interest rates to 4.75% in November. So how could financial markets react to this economic news? And how will it affect the performance of shares, bonds and property? We believe it will be important to keep an eye on US markets to see if Donald Trump follows through on market-friendly policies such as tax cuts and reduced regulation. Meanwhile, markets such as China, other emerging markets, the UK and Europe will be watchful for any changes in trade terms. However, we remain confident in the outlook for returns over the longer term. Many equity markets saw solid gains over 2024. There were strong performances from those in the US, UK and Japan. Those strong performances could continue into 2025. There continues to be some uncertainty around inflation and interest rates, although generally we believe that 2025 will see some further cuts to interest rates. These could provide a welcome boost to economic growth. Companies involved in artificial intelligence, also known as AI, have performed well in recent years. With the technological boom looking likely to continue, the share prices of many of these companies have soared, and we could see periods of volatility if investors question whether the potential for further growth in AI matches the value of AI companies. Turning to bonds, we continue to believe that bonds play an important role in investment portfolios over the longer term, but the opportunities in this asset class may be limited at present. In commercial property, which typically houses businesses, any continuation of interest rate cuts could create opportunity for growth. As we have seen, economic and market changes can have significant impacts on different types of investment. That's why it's important to spread your investments across different types of assets, like shares, bonds, and property, and geographical regions. It means risks are spread out, which over time can help smooth out any sudden drops in value. In summary, markets generally performed well in 2024, and there are some encouraging signs for 2025. As we move through the year, we'll be watching the political and economic landscape carefully and keeping you informed about what that means for your pension savings.